What's going on, guys? Justin Conroy, Financial Dad here, and today I want to talk to you about why credit cards are better than debit cards. A Bankrate.com survey back in 2016 shows that only 1 in 3 millennials even have a credit card, and even less actually use them on a regular basis. Now, obviously, we've been told for years that credit cards are evil, credit cards are scary, credit cards can ruin your life, credit cards cost money. Well, the fact of the matter is that credit cards that are used responsibly are not only safer to use than debit cards, but they also have a lot of monetary and non-monetary benefits. So by the end of this video, you'll have a full understanding of why you should be using credit cards for almost all of your purchases so that you can be safer and more productive with your money. So with that, do me a big favor and smash the like button for the YouTube algorithm. Let's go ahead and get this started. The first thing I want to talk about is the fact that credit cards don't have direct access to the money in your bank account like debit cards do. Let me explain. When you use a credit card, they act as a middleman for your purchases. Transactions with vendors are registered with a credit card company. You go about your month making transactions, and after about a month, the credit card company sends you a bill. Until this point, you've technically been spending the credit card company's money, and your own money hasn't been touched. Once you get the bill, then you pay your credit card company directly to pay off your debt, and your money stays safe. When you use a debit card, on the other hand, the transaction with the merchant is registered directly with your bank and your bank account. The money gets immediately debited from your account and sent to the merchant. So with debit cards, there's no middleman, and as a result, there's a lot more risk in these types of transactions. Speaking of risk, let's move on to the second thing that I want to talk about, which is the fact that credit card and debit card fraud is unfortunately a very real thing that we have to worry about. And credit card fraud protection is a lot better than debit card fraud protection. Most people don't know this, but here in the United States, credit card fraud and debit card fraud are actually governed separately. Credit cards are governed by the Fair Credit Billing Act, that's the FCBA, and debit cards are governed by the Electronic Fund Transfer Act, that's the EFTA. I won't bore you with the details of all these, but what it boils down to is that fraud protection for credit cards is much better. For credit cards, the FCBA says that card holders have 60 days from the time that they actually receive their bill to dispute charges that are unauthorized, incorrect, or if goods or services weren't actually delivered. At the end of the day, if there's a false charge on your card that's deemed valid for some reason, you're only legally liable for up to $50 of the total value. And to top it off, generally speaking, credit card companies don't usually bother charging you for those fraudulent charges because they don't want you to get mad and cancel the card. They make so much more money off of merchant transactions and interest payments from irresponsible credit card users that they don't want to lose you as a customer. On the other hand, when it comes to debit cards, the EFTA has rules on how long you wait to dispute charges that happen on a lost debit card. At a minimum, if you dispute within 2 business days, you're liable for up to $50. But if you wait more than 2 business days to dispute something, it could cost you up to $500. Worse yet, if you don't notice a fraudulent charge for over 60 days, you could be liable for the full amount. And to top all that off, that only counts if you lose the card. Now give them this, if you don't lose the card but still have a fraudulent charge show up on your account, as long as you notify them within 60 days, you're not liable. So that's good. But after 60 days, all bets are off. So for me, when it comes to credit card and debit card fraud, there's a clear winner. Credit cards are way safer to use than debit cards. They're far more flexible, and you aren't liable for nearly as much money if you don't notice a bad charge for too long. Plus, you have a lot more time since you have 60 days after your bill arrives. So if you pay attention, that means you could have up to 90 days to notice any issues before you really can't do anything about it. Let's move on to the third reason credit cards are better than debit cards, and that is the fact that credit cards, unlike debit cards, give you rewards. This is probably one of the most obvious benefits, so I won't spend too much time on it. Now, debit cards are doing a lot better these days, but they still really haven't gotten there in terms of rewarding people for the systems that they use. Credit cards offer a wide variety of rewards for doing nothing more than just using the card. There's even great cashback card options out there for cards with no annual fees. So you can literally just sign up for free, get the card, use it to buy things you'll buy anyway, and get free money back in return. No fees, no interest, just money in your pocket. Now, when it comes to rewards, I must agree with Mr. Dave Ramsey back here. He'll tell you that credit card rewards are not going to make you rich, and they won't. Just look at the math. Let's say that you make $50,000 per year and you live paycheck to paycheck. That means that about $10,000 goes to taxes and the like, and you spend about $40,000 per year using your 2% cashback credit card. This means that you get $800 back per year. So it definitely isn't going to make you rich, but you gotta think. What's $800 to you? Is it a few months of groceries, gas, car payments? How about the fact that with your $50,000 a year salary, that $800 equates to 33 hours of work? The point is, why pass this up? It's free money and it costs you nothing. Moving on to the fourth reason that credit cards are better than debit cards, and that is the fact that a lot of credit cards offer really great consumer protection and security features. Now, not all credit cards offer the same protections or features, but let's take a look at one of the most popular no annual fee cashback cards out there, the Discover It Cashback Card. You get free alerts that notify you if your social security number is found on any bad websites, or if any new accounts show up on your credit report, free alerts when anyone pulls your credit score, and $0 fraud liability. What about another popular card? How about the Chase Freedom Card? Again, no annual fee, and you get $0 fraud liability protection, purchase protection on up to $500 per claim if you report within 120 days of purchase, extended warranty protection, and several other things, all for just using the card. And this is just what you get with some of the free popular cards that I pretty much picked at random. You get some crazy protections if you decide to go with a card with annual fees. Heck, sometimes the protections alone are worth the annual fees. Anyway, let's move on to the fifth reason credit cards are better than debit cards in case you aren't convinced already. And that is the fact that credit cards can help you build your credit score, which can end up saving you tens of thousands or even hundreds of thousands of dollars in your lifetime. I've got a whole video on how to increase your credit score up here, but I'll break down the credit card related parts here for simplicity. Your credit score is made up of several key factors that your credit card can help with. First, there's good and bad payment history and length of credit history. That is to say, in order to get a good credit score, you've got to have as much good payment history as possible, and the longer you can prove that you got good history, the better. So credit cards can help you here because they're really pretty easy to get overall. If you're 18 years old, this is one of the best things you can do. Go out, get a credit card, buy something small on it each month, something that you'd buy anyway, like gas or groceries. Pay it off every month, and over time, it will drastically help your credit history so that you can go buy a house in 12 years and you'll get a good interest rate. More on that in a bit. Next, there's the credit utilization part of your credit score. Basically, the way this one works is that they compare how much debt you carry versus how much available credit you have. You want that number to be as low as possible so that your utilization of your credit lines is small. So in general, the less you can use the cards, the better, and also in general, the more available credit you have, the better. So get a card, don't use it too much, call the credit card company every 6 to 12 months and ask them for a credit increase, and you'll be well on your way to having a great credit score. Again, this is really easy stuff that can drastically increase your credit score over time, but if you want more details on credit scores, check out the link up here. But why is having a good credit score so important? Let's do some quick math. The difference between a fair credit score and an excellent credit score when applying for a mortgage could be the difference in 1.5% or more of your mortgage interest rate. Apply that difference to a $250,000 loan for a house, comparing a 5% interest rate to a 3.5% interest rate over the course of 30 years, and you're talking about almost $80,000. You can't tell me that having a good credit score isn't important. I mean, if you don't want $80,000, please send it to me. I will make sure that it gets a good home. All that being said, hopefully by now you can see that by using a debit card for your purchases, you're not only putting yourself at a higher risk for fraud and liabilities, but you're also leaving money on the table when it comes to both cashback and the money that you lose by not having a good credit score. Let me know your thoughts down below. I know there's a lot of folks out there that would disagree with me, but the numbers don't lie. Credit cards are objectively better than debit cards. Of course, all of this only applies if you are responsible with your credit card usage. If you're racking up big credit card bills every month that you can't pay off in full, none of these benefits matter. You'll be stuck paying a whole bunch of interest, which will negate all the benefits I just talked about very quickly. So if you can't control your spending, if you can't use credit cards responsibly by only using them on things that you would buy with your debit card or cash anyway, you shouldn't be using a credit card. I would fully stand behind debit card usage for someone who says, I've got a problem and I can't help spending more money than I can afford when I use credit cards. If that's you, cut up your credit cards right now because nothing I talked about today matters. But hey, if you made it this far in the video and found some sort of value in it, whether it be entertainment or education, be sure and smash that like button for the YouTube algorithm. Pushing that like button lets YouTube know that you really enjoyed this content, and they use that data to help decide if this video should be pushed to more people. So it really does help this channel grow. Also, I post new videos about wealth building, money management, and personal finance every week, so be sure to subscribe for more content if you haven't already. With that, if you're new to personal finance and need a beginner's crash course, be sure and check out the video on the screen right now. because it will cover the basics that you need to know and will help you get on your path towards wealth. Thanks for watching.